Hi there, I'm Stephen Adams. If we've met before in one of my previous courses or one of my membership groups, then welcome back to this simple options income workshop. If we haven't met before, then welcome to the workshop, and I'm very happy to meet you. I'm looking forward to this workshop. I think it's going to be a lot of fun. We're going to go through this really simple strategy to produce income using options. But what I wanted to do is put together this short video. It's about 10 minutes long, talking about the definition of what an option is. So this video is really for people who have never traded options before. So I'm going to go through some slides and talk about, what is a call option, what is a put option. So if you have traded options before, or you know what an option is, you don't have to go through this video. It's just to make sure that we're all at sort of a baseline level when it comes to understanding what an option is. So if you don't know, then stick around for the slides. We're going to talk about it here in 1 second. And if you do, then I will just see you at the workshop and you don't have to go through the rest of this video. But again, I'm looking forward to the workshop. It's going to be a lot of fun. We'll have plenty of time to go through the strategy and to do Q&A around the strategy. And I will see you at the workshop. If you're sticking around, let's get to the slides. So again, this video is really intended for someone in the Simple Options Income Workshop who doesn't have a basic understanding of options. So we're just going to run through that really quickly. So options can be used to decrease or increase risk and reward. And in the strategy that we're going to be doing in the Simple Options Income Workshop, we'll be using them to decrease risk and to generate income. Options are valuable for a number of trading strategies. They can be used by themselves. They can be used in combination with stock. But we're going to be focused on one strategy for this workshop. So we won't be talking about the myriad ways that you can use options. We're going to be focused on one specific strategy in which we can use options. Options can be used to enhance returns and to generate cash, and we're going to be doing both of those. And options can also be used just as a trading strategy or used in a trading strategy by themselves. So you could just be an options trader. But we're going to, again, be using them to enhance returns and to generate cash or in a specific income strategy. So let's get to the definitions. We have two types of options, a call option and a put option, and we're going to be using both of those in this strategy. When we talk about options, we're going to be talking about rights and obligations. So buying an option is going to give you a right to do something, right? So if you buy a call option, it's going to give you a right to buy stock. And usually, and in all the cases we're going to be talking about, it's 100 shares. So the key takeaways from this video: one option is equal to 100 shares. If you buy a call option, it's going to give you the right to buy 100 shares of the stock at a specific price for a specific time. If you buy a put option, it's going to give you the right to sell a stock, a specific stock, 100 shares of that stock for a specific time at a specific price. Now, this strategy doesn't really involve buying call and put options. There are variations of the strategy that we can talk about and that we will talk about that involve buying puts and calls, but really we're going to be focused on selling puts and calls. So selling a call option imposes an obligation on you to sell the stock. And again, 100 shares, one option, 100 shares at a specific price within a specific time period. Selling a put option imposes the obligation. And when we talk about obligations, think about it this way. Think about it's a promise. So if I sell a call option, I'm promising that I will sell that stock if it's requested of me to sell it at a specific price for a specific time period. If I sell a put option, I'm promising to buy 100 shares of stock at a specific price for a specific time period. And once that time period expires, if I don't buy the stock, then that obligation disappears. So let me give you just a quick example. If I sell a put option that has a $100 strike price, and that put option has a 1 week time period. And today, when I'm recording this, it's Tuesday. So say that option expires on Tuesday of next week. So when I sell that put option, I'm promising that I'll buy the stock at $100 from at any time between now and next Tuesday. Now, if the stock is trading above $100, say it's trading at $101, and it stays at $101 or higher between now and next Tuesday, then I'm never going to be asked to buy that stock at 100, because no one wants me to buy it at 100 when they can sell it at 101 or higher. So in a week's time, that obligation will disappear, right? So I'm only obligated for the time period that the option has associated with it, right? So I'm only promising to buy it for a certain amount of time at that price, right? So that's what an obligation is. Same thing with a call option. If I were to sell the call, then I'm promising that I will sell the stock to the counterparty, the person who buys the call for our purposes, at a specific price for a specific time. So with a call option, it's just the opposite of the put option, right? So if I say that I'm willing to sell a stock at $100, so the strike on the call option is $100, and again, let's assume it's a week-long period. If the stock is trading at $99 for that week, and it never goes over 100, even though I promised to sell it, and I get paid for that promise, and that's what we'll be talking about in the strategy. When I make that promise, if it never goes over $100, then that promise is going to expire, and I'll never have to sell the stock. Okay, so I just want to make sure you understand the right and the obligation. The obligation, again, you can think of as a promise. And when you buy an option, whether buying a call option or a put option, you have the right to enforce that promise that the other side makes that sold it. So that's the basic, again, just a basic definition of what a call option is and what a put option is. The only other thing that I want you to understand before we go into the workshop is what premium is. And I kind of refer to that. Premium is the value of the call or the put above the strike price for a call option, below the strike price for a put option. Premium is present in the price of a put for two reasons. For our purposes, two reasons are time value and the volatility of the stock. By volatility, I mean how much the stock moves up and down and how rapidly in any given time period. So some stocks are extremely volatile, some stocks are not volatile and don't move much at all. But the premium in the call option or the put option and how much that premium is based on time value and expected volatility. The longer the time value until the option expires, the higher the premium, and the higher the expected volatility in the stock, the higher the premium. So that's the concept that I want you to have an understanding of, is the fact that there's premium in options, and that premium value is what we'll be talking a lot about in the workshop. Again, if you don't have a clear understanding of this, don't worry, it's fine. And if you have an issue with it, that you don't understand what an option is, what a call option is, what a put option is, and you don't understand premium, I'm happy to talk one-on-one, and we can go through some, more concrete examples and explain it. But I wanted you to have, again, at least some idea of what we're going to be talking about in the workshop. I didn't want you to come in to the workshop and you've never heard about what an option is at all. So this is really just a super simple baseline for, what a put and a call option are and what premium is. So if you have this, you've got the basics of it from this, 10-minute video, then we're good to go for the workshop. So again, if you don't know, if you've gone through the video and you still don't have just a, basic sense, shoot me an email and we can hop on a call for a couple of minutes and I can explain, in more depth what a call option and a put option are. And we'll get to that basic understanding before the workshop. So that's it for, again, this short video. I look forward to seeing you guys at the workshop. I think it's going to be a lot of fun, and we're going to learn how to make options work for us and generate income for us and decrease and limit risk when using options with this strategy. So I look forward to seeing you guys soon, and thanks for watching the video.